If you'd like to see more of our videos, please subscribe to our channel on YouTube or follow us here on Instagram. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today is January 7th, 2020, and today is Tuesday morning. So looking at the major economic events of the day, just one event coming out of the United States at 5 p.m. South African time. ISM non-manufacturing PMI number coming out. It's an inflationary report. Unless there are any surprises, I don't think it's going to change or rattle the markets. But looking at the markets, we watch the US dollar pair its gains versus the major pairs across the board getting weaker. We're going to take a look at that, watching the GBP actually gaining the most. Now looking at the Dow Jones, it finally rebounds after the gap down over the weekend, okay, after the events of what happened in Iran, in Baghdad actually, of assassinating the Iranian general, okay, reeling the markets over the weekend. Now looking at the commodities, gold looks like it's closing its gap but perking up while oil retraces. Okay, I would have expected gold to actually continue to sell off, while the FANG stocks, the Apple, the Facebook, the Google, are ones that are lifting the market. But let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at the Euro USD at a 4-hour chart, as you can see down here. And we're just perking up about 40 points, okay? 30 to 40 points from here to here. Not something major, but really very choppy, okay? This is a 30 pip change, 30 to 40 pip change. However, when we look at the GBP USD, we see a little bit more activity, okay? Going from 130-ish level, 130.70-ish level, up to 131.50-ish level. Let's highlight that right there. From here. Now again, it's trading in tandem, okay? Nothing is really getting stronger or weaker versus the dollar, excessively, and then thereby showing us either relative strength or a disproportionate relative strength vis-a-vis each other. What I mean by that is that if we're looking at the GBP, we're looking at the Euro USD, they're both trading pretty much, it looks like the same chart, okay? At least for now. Okay, when there is a discrepancy, that's when it's time to pounce on it. Now, looking at the Japanese yen versus the dollar, we saw that, yes, they actually capitulated this 107.78 and finally bouncing off of it to 108.41. Now, what was previously support is subsequent resistance, okay, as we've mentioned several times before. So this was support several times. So I expect this to be resistance right there. So it may make a double bottom, so just be aware of it. May not happen all today, but it's something to consider going into today and going into tomorrow. Now looking at gold, all right, this is what I would have expected from gold. Looking at a 4-hour chart, let's look at a 1-hour chart. We gapped up, very natural over the weekend. Some unsettling, call it political news around the world, okay, when the United States bombed, the general, the Iranian general, and we gapped up to 1576, okay, breaking, okay, our high here, all right? We had this resistance at 1555, and we broke above it, okay? That's a major area to break above, okay? Now, okay, when we look at it right now, it's perking up, not testing its 1555-ish level and bouncing right off of it, okay, which it did. Okay, and now we're trading at 1566. So as long as it doesn't break this 1555-ish level, I think we could settle above it. Okay, eventually it may still break it because, as the Dow Jones continues to rally, okay, especially we're only a week away from China and US coming to some sort of trade agreement between the two, and that's going to explode the market, especially also if the new NAFTA, which is a North American Free Trade Agreement, gets signed, okay, the NMS that we spoke about. So that's something as well to consider going into next week, and this may actually test this 1556 once again. Now looking at oil, this was much more expected, okay? Oil actually retracing from its 64.25, 65-ish level and back down to the 62.74. Now I expect it to retrace even further, even down to the 61.70-ish level, okay, which it tested before, okay, we had this massive rally. Okay, so something to consider going into this week. We're only Tuesday. Tomorrow is Wednesday. We have crude oil inventories tomorrow, so just be aware of that. Now looking at the Dow Jones, okay, we had this massive sell-off, okay, down to 28,416, okay, which is relatively not such a massive sell-off, okay, 400 points. After the news came out, now we made a double bottom at this 28,416. 416-ish level. You can see right here, that's a beautiful double bottom. And now we're perking up to 28,679. So this does still look like it wants to take it on the high side. Okay, now we do have a high of 28,858. That is our challenge, certainly once we hit the 29,000 as well. However, we may still hit some choppiness as this political news actually, regurgitates through the market. And then, this is going to come back. That's basically what I'm saying. This thing with Iran is not over. It might not happen today, it might not happen tomorrow, but it will come back at a certain point. Now, when we look at some of the other stocks here, we're looking at Microsoft back on its highs to 158. Apple, like a rock, like as if nothing happened, $299.30, really wants to break that $300 range. Now, looking at the other stock that we spoke about, Google making all-time new highs, okay, very, very strong. And also Facebook. Let's just jump into Facebook as well, breaking that 209 high. Okay, we still have, to break this 215, but breaking it with a candlestick. Okay, so the FANG stocks are pushing us higher, even though the Dow Jones is not perking, to make new highs. Okay, it's just a matter of time that it will lift the rest of the market up. These stocks are going to lift the rest of the market up, especially if we get this good news coming in next week with China and the US. It's going to explode the market on the upside, the US markets, that is. Okay, as you can see, and I've made this several times, is that the markets are really strong in the US. Okay, a lot of volatility there, much more so than the Forex symbols that we've been accustomed to trade over the past 4 or 5 years. So you want to really put your most emphasis, okay, most of your trades should be US stocks or US related, because that's where the most money could be made. Okay, this is Fred Razak. I want to wish everybody a great trading day. Thank you.